Hi. Okay, so today I want to elaborate a little bit on the subject of the last video and the fact that the commercial investment and banking industry um, does tell their clients at times, or do tell their clients at times to go long gold and silver, but is usually at the um optimally worst time to do it when gold and silver are at a short-term peak. And so it's one good way of looking like they're not biased by always being anti-gold, anti-silver. But in a way, it's just a clever way of being anti-gold, anti-silver, because if they convince a whole bunch of people or the public to go long gold and silver right before the banking cartel manufactures another raid in gold and silver and smashes prices down, it in effect keeps those what would be new buyers of physical gold and physical silver out of the market for a long time, because it makes them gun shy to pull the trigger next time, due to the fact that they were convinced to go in and then promptly lost 15–20% of their money within a matter of weeks or sometimes even days. When we look at this, you have to understand that the commercial investment industry and the banking industry, their goal is just to make money. So it doesn't matter if you make money, as long as they make money. That's their number one goal. So if they can lie to you, deceive you, cheat you to make money, they will do it, as has been proven since 2008. And actually, they've been doing it for like a century and decades before that. But a lot of the information came out in which they lied to their clients, and internal memos and so forth, that basically prove this point that a lot of people have been saying but had been ignored up until the first manifestation of the crisis in 2008. So, in that regard, there's going to be a whole bunch of people, again, suckered into Facebook because, the price is going up, and then Facebook at some point in November will probably, implode again. The same thing with the stock market that's being pumped up right before the election. So if it somehow stays alive because of quantitative easing and does not have a significant pullback before the election, then it just makes the risk of a major setback after the election that much higher. When it comes to gold and silver, of course, if it's a hot thing, they're going to try to basically parlay what is a hot thing into money for themselves. So whether it causes you as a new buyer to lose money is irrelevant to the firm. So one thing, that the commercial banking industry and the investment banking industry bank on is because we have become a nation of short-term, not short-term, but of short attention span, due to things like Twitter, where you can only tweet a certain amount of letters, and with everyone wants things in the media today and sound bites and eye-catching headlines, where basically people read the headlines but don't get any of the meat of the real story by reading the whole story. It's a good thing that people have short-term memories, because you can even go to my investment blog, because if people would ever take the time to check out the track records of those people in the banking industry, they wouldn't be following that anymore. But it's mind-blowing to me that people still follow these analysts, although they've been wrong for, some of them wrong for 6 years straight, like Ben Bernanke. Like almost every major prediction he's made about housing recovery, economic recovery, has always been proven wrong within 2 to 4 quarters of his prediction. We look at Stephen Roach from Morgan Stanley, one of their chief economists, said, "The commodities bubbles has burst." He said that in September 2006. And if you look at the price of silver, it was $11, and now it's gone to well over $30. And it's the same thing for gold, was about $580 an ounce and went well over $1,700. So you basically had price appreciation of more than 200% after Stephen Roach and Morgan Stanley said the commodity bull was over in September 2006. But because we all have short-term memory, nobody remembers what he said 6 years ago. So, one way to really stop listening to all these sound bites and all of this misinformation and propaganda campaign is to do your research, because a lot of the times, a lot of what has been said is documented online. So if you're thinking that there's a top economist at some, big shot investment firm that's telling you to buy gold or sell gold or buy silver or sell silver, if you want to know whether they're trustworthy or not, go look at their track record. And if their track record has been deleted by their firm and there's nothing there to find, then you know that person should not be listened to, because the only reason investment firms delete the track records of these people is because it's been inaccurate. So they don't want people to be able to find it. Okay, so that's all until next time. Again, please remember my Books for Charity project, which you can find online at our website, www.smartknowledgeu.com. That's 3 books I wrote, 1 literary fiction novel, 2 about the banking system and how sound money can return us to prosperity once again, and what we can actually do to solve this problem. And again, I'm donating 100% of the first year profits to 3 wonderful, wonderful organizations. So it's all 3 organizations that help children with learning disabilities or children who have been orphaned. So please do check it out. Thanks for watching, and until tomorrow, have a great day. So long.